As we all know, markets around the world are flashing warning signs that the global economy is on the brink that causes global recession. A global recession is recession that affects many countries around the world. But why this is happening? Is the global recession is coming? In today's video, we are going to discuss about global recession in USA and its causes and effects, in Ukraine war and economy, and what does the Fed have to say about at all. A global recession is an extended period of economic decline around the world. It is accompanied by more or less simultaneous recessions in many economies, as trade relations and the international financial system transmit the effects of economic shocks and recessions. What are the signs world is headed for recession? We are already in a global recession, and unless immediate policy action is taken to curb speculative behavior and raise prices in energy, we'll plunge into a full-blown recession by the end of the year, partly caused by excessive interest rate increases. Although the crypto market has flourished in recent years, it is impossible to say with certainty how digital coins will perform in the midst of a severe economic downturn. Bitcoin dropped below $20,000 Saturday, buying and selling at its lowest stages in over a month, after shares offered off sharply Friday as traders pulled again from unstable property. Amid renewed worries, the Federal Reserve's efforts to combat inflation should tip the financial system into recession. What are the main causes of global recession? Several factors contributed to the global recession, including war, asset price crashes, energy and commodity price crashes, reduced demand, reduced consumption, lower wages, and a general decline in consumer and investor confidence. The situation is exacerbated by extreme risk aversion catching up as the recession unfolds. According to the IMF, means International Monetary Fund, annual declines in gross domestic product (GDP) per capita are leading to economic recession. The National Bureau of Economic Research (NBER) looks at the factors that determine whether a country is in recession. These factors include inflation-adjusted real income, employment, manufacturing, real GDP, and inflation-related retail sales. An economy is considered active if these factors are efficient and show no signs of slowing down. Otherwise, a possible recession is recognized. Recession in USA. Recession fears rise as U.S. Federal Reserve optimistic about fighting high inflation, and officials increasingly talk about the need to inflict economic pain to contain price pressures. Several economists have told Al Jazeera that they are facing a surge in U.S. GDP, a measure of the production of goods and services, contracted 0.6% in the most recent quarter after contracting 1.6% between January and March. A common rule of thumb for recession is 2 consecutive quarterly declines in GDP. The U.S. trade deficit narrowed in August to its lowest level in more than a year. Also, Goldman Sachs last week raised its U.S. GDP forecast for the third quarter by 1 percentage point to 1.9% annualized. Days after the IMF predicted a global recession, the U.S. economy slipped into recession after official data released on July 28 showed the U.S. economy contracting for 2 straight quarters. Concerns about the possibility of falling have increased. IMF economic advisor and research director Pierre-Olivier Grinch has cited the pandemic and the ongoing war in Ukraine as the main reasons for the increasingly dark and uncertain outlook for the global economy. What does Fed have to say about all? The Fed's contemporary jumbo-length price hike induced international indexes to seesaw as traders have been soaking up the bank's hawkish price message and dedication to persevering with hikes into subsequent year. The United States has all over again used the U.S. dollar's overwhelming May to switch the disaster to the relaxation of the sector. By moving the load of inflation to the relaxation of the sector, the USA is developing financial havoc for the poor. Effects on Ukraine's war and economy. The World Bank has warned that countries around the world are facing recession as the Ukraine war hits economies already rocked by the COVID pandemic. The world's major economies are in recession as the global energy and inflation crisis triggered by Russia's invasion of Ukraine has slowed growth more than previously forecast. Global output next year is expected to be $2.8 trillion, £2.6 trillion, below the OECD forecast before Russia attacked Ukraine, a global loss of income comparable to the UK economy. That's all from our side. If you enjoyed this video, make sure to give it a thumbs up and subscribe to our channel for more informative content. Thanks for watching.